In December 2022, this company was being written off. The share price had fallen 99% to $3.55. People were openly discussing which quarter it would run out of money. 4 years later, 10 of the most successful investors alive are holding it, and last quarter, every single one of them bought more. We follow the filings of 105 well-known investors. 10 of them hold Carvana. And look at the quarter summary. 9 of them added to the position last quarter, 1 opened a brand new one, and not a single one trimmed or sold. 10 out of 10, all leaning the same way. Mandel of Lone Pine, Andreas Halvorsen of Viking Global, Philippe Laffont of Coatue, Frank Sands, Lee Ainslie, Renaissance Technologies, and Stanley Druckenmiller opening a new position. But look at the top of that list. Clifford Sosin has 79% of his entire disclosed portfolio in this one company. That is not a position, that is a conviction. So the useful question is the good one. What did they see? And you do not have to guess, because the thing that changed at this company shows up in one number, tracked every year since it started filing. This is operating margin. Out of every dollar of sales, what is left after paying every cost of actually running the business? In 2014, it was minus 36%, meaning it burned more than a third of every dollar it took in. Watch what happens. It climbs for 8 straight years, collapses again in the 2022 crisis, and then turns positive. Last year, it was plus 9.3%. Margins improving usually means a company shrank to something profitable. That is not what happened here. Revenue went from $41 million in 2014 to $20.3 billion last year. It got roughly 500 times bigger and turned profitable at the same time. That combination is rare, and it is what those 10 investors are underwriting. And here is something I found reassuring. Our own valuation read does not say this is a mania. It says fair value. Not a screaming bargain, but not a bubble price either. Roughly what you would expect to pay. So these 10 are not chasing something that has run away. They are paying a fair price for a business they think keeps improving. It carries about 30 times earnings, where the typical car dealership trades near 15. Roughly double. That tells you the market is not valuing this as a car dealer at all. It is valuing it as a technology company that happens to sell cars. If that is what it is, the premium makes sense. That is the bet. Now, no good story is unanimous, and this one is not either. About 13% of the available shares are sold short. In January 2026, a short-selling firm published a report alleging the company had overstated earnings through deals with a related family business. Carvana called that report inaccurate and intentionally misleading, and the stock has traded higher since. I'm telling you, it exists because you would want to know it exists. One of the accounting quality screens on our page reads check rather than clean here. That is not an accusation, and it is not proof of anything. It is one automated test saying the relationship between earnings and cash is worth a closer look, which, for a company that just went from losing money to making it, is a fairly normal thing to see. So put the whole thing together. A company that nearly died, rebuilt its margins over a decade, got 500 times bigger, and is now profitable. 10 of the most successful investors alive looked at that, and every one of them bought more last quarter. There are open questions, and there are people betting against it. Both of those things are true at the same time, and that is what most real opportunities actually look like. Seeing that 10 great investors bought something is genuinely useful, and it is a good place to start looking. It is not a decision on its own, because you do not know their time frame or what else they hold against it. You have to be comfortable with what you own, especially on the days it falls. You have both sides now. The choice is yours to make. Visit us at smartcharts.co, where we explain the stock market in plain English for people who were never given the manual. Nothing here is financial advice.